The CEO of Chevron spoke to us a little bit earlier on to tell us about where he sees oil prices going next.
Supply and demand have become better balanced, and you've seen some strength in prices. I'd say, we're in the ballpark right now of what we would expect for full-year prices, again, with volatility, no doubt, over the balance of this year.
Time now for Futures in Focus. They're linked, believe you me. Let's go to the CME. Ted Seifried, Chief Market Strategist with Zaner AG Hedge, joins us now. Ted, last time we spoke, you pointed us to $62 a barrel when it comes to WTI. Funnily enough, that's exactly where we are now. Where does the price go next? Because you've clearly got quite a decent crystal ball. And how much is it down to the supply side story, and how much of it is down to the demand side of the story?
Yes, great question, Guy. And I really like what he had to say about that. I think we're kind of at a right price here. While demand has been somewhat mediocre, supply concerns have really been what's driving the market. We've seen evidence that Russia and OPEC are maintaining cuts and maybe cutting more than expected. We've seen a sharp decline in Saudi exports last week. U.S. output has declined in January, and this is the big key here. Rig counts continue to decline. We're looking at the largest quarter drop in 3 years. So are we reducing exploration? Is that a possibility? That would be a concern for the supply side. U.S. exports were up last week. However, the strong U.S. dollar could be poising for more strength, and that might start to limit exports at some point. So the question is, can crude oil hold over the 200-day moving average that we have right here, 60.75? We are overbought with RSIs over 70%. The funds right now are long, roughly 250,000 contracts, but that's not a very big position for them. There is room to run there. And a lot of talk back at the end of last year, traders were expecting crude oil to trade around the $70 mark at some point in 2019. So what I'm kind of wondering is, can we see a little bit of a pullback here? I'm looking for support in March crude around 59.01, and then again at $52. The Jan lows is a big, strong target, big, strong level of support. But ultimately, I wonder if we can go higher. I wonder if we're going to go sniff out that $70 level.
OK, that's interesting. We'll remind you of that next time round because, as I say, decent crystal ball in operation at the moment. Ted, let's talk a little bit about the dollar. You mentioned it a couple of times there. I'm wondering what traders are taking their cues from right now, because interest rate differentials, which in theory should be a big determinant of which way currencies go, don't seem to be operating. So kind of what are you guys looking for?
You're absolutely right, Guy. And when we look just at dollar fundamentals, there's not a whole lot of reason for us to go higher right now. But when you look at the rest of the world, there's not a whole lot of reason to go higher there either. So somebody's got to be the beneficiary of that. And right now, if you look at the dollar chart, it really looks like it's poised to break out to the upside. So, if we do see some continued strength in the dollar, that could be bad for crude prices. That could be bad for commodity prices as a whole. Again, like you said, the Fed's not looking for any hikes in 2019. Maybe we see a decrease. This is all dollar bearish stuff. But everything that's going on with the ECB and everything like that is giving us reason that, maybe we're the tallest or the best option in the room. So I'm wondering if we can get a shot at 102, 102.90 at some point.